Everyone, and welcome to Momentum channel. Today in this video we're going to talk about the list of 100 stocks that have outperformed the stock market year to date, and these were the stocks that were coined by the famous investor Jim Cramer, the host of Mad Money show, as the Mad COVID-19 index of stocks. These stocks are great choices to buy as they have been able to deliver against the backdrop of uncertainty and have good growth potential. So first I will get into the criteria that has been used to select these stocks. We'll then review the list of 100 stocks in this index, and lastly I will tell you which one of these stocks I personally own and which ones I'm considering to buy. So let's get into it. Before we go any further, did you know that currently Dow Jones is on pace for the best month's performance since October 2002? What's more, S&P 500 is on track for best months since December of 1991. Alright, so the criteria used for selecting these 100 stocks is that every one of these stocks here on this list has outperformed the S&P 500 year to date. What's more, these are the stocks that, according to Jim Cramer, the renowned investor, are all tailor-made for the COVID-19 environment, as they have been able to sustain these uncertainties around COVID-19 and at the same time outperform the S&P 500. So he's therefore gone ahead and handpicked the list of these 100 stocks and calls them as the Mad COVID-19 index. Alright, without any further ado, let's take a look at these stocks. In the tech sector, we have the following companies: Salesforce, Adobe, Zoom Video, RingCentral, Slack, CrowdStrike, Okta, Zscaler, Cloudflare, Coupa Software, DocuSign, Everbridge, and Viva. Next, on the beverages sector, we have PepsiCo and Boston Beer Company. Next on this list, we have the consumer packaged goods. Here, we have companies as follows: Clorox, Colgate Palmolive, Kimberly-Clark, and Procter & Gamble. Next on this list, we have e-commerce. And here we have 4 companies listed: Chewy, eBay, Shopify, and Prologis. On the financials list, we have MarketAxess, TradeWeb, Square, and PayPal. Next on this list, we have video games. Here we have 3 companies listed: Activision Blizzard, Electronic Arts, and Take-Two Interactive. As for home entertainment, we have a couple of more familiar names. We have Netflix, Roku, Snap, Spotify, Akamai Technologies, and The Trade Desk. As for healthcare, we have a long list of companies here, and no wonder, because during the COVID-19, a lot of healthcare and pharmaceutical companies have done better than other companies. Here on this list, we have Abbott Labs, AbbVie, Centene, United Health Group, Gilead Sciences, Regeneron, Sanofi, Danaher, Thermo Fisher, Eli Lilly, Baxter, Becton Dickinson, Dexcom, GlaxoSmithKline, Johnson & Johnson, Masimo, Perrigo, Pfizer, ResMed, and Zoetis. Moving on, and as for Megacap Tech companies, we have on our list Alphabet, Amazon, Apple, and Microsoft. Next on our list, we have the normal tech companies, and here we have 2 companies listed. The first one is Citrix Systems, and next we have Logitech. As for packaged food, on our list of companies, we have Campbell Soup, Conagra, General Mills, Hormel, J.M. Smucker, Kellogg, McCormick, and Mondelez. Next we have real estate investment trusts, also known as REITs. On our list we have American Tower, Crown Castle, Coresight Realty, Digital Realty, and Equinix. Moving on, we have restaurant survivals. Here on our list we have 3 chain of restaurants: Chipotle, Domino's, and Wingstop. As for retail survivors, we have Costco, Walmart, Dollar General, and Home Depot. Next we have semiconductors. On our list we have AMD, Nvidia, and Marvell Technology. As for companies with decent yield, we have Dominion Energy, NextEra Energy, and Verizon. And lastly, we have a category called exotics, which is a mixture of different companies that are from different sectors, but at the same time they have those unique qualities that we talked about. They've been outperforming the S&P 500, and of course they're also of interest for Jim Cramer to be on this list of his 100 index for Mad COVID-19. On this list we have BioNTech, Inovio, Moderna, Livongo, Teladoc, Barrick Gold, Beyond Meat, Freshpet, Insigo, Owens & Minor, and Peloton. There you have it, folks. These are the list of 100 stocks that are on the mad COVID-19 index of stocks according to Jim Cramer. Now, what I promised that I'm going to do is tell you which one of these stocks I currently own and which stocks I intend to buy in the coming weeks. The stocks that I own on this list, of the 100 stocks that we reviewed, I only own actually 4 of them, and they are Apple, Verizon, Salesforce, and AbbVie. So only 4 out of the 100 stocks that we reviewed. But in terms of the stocks that I'm interested to purchase next, and I'm keeping an eye in order to buy them at the right price, I will definitely consider to buy some stocks from tech. I'm eyeing on Zoom and Adobe as 2 options for myself. As for beverages, I already own share of Coca-Cola, so I would probably not go ahead to buy any of the beverage shares that's been listed there. As for entertainment, I'm definitely considering Netflix and potentially Disney. Now, Disney was not on this list of 100 stocks, but it's one of those stocks one of those companies that I'm particularly interested in. In the semiconductor field, both Nvidia and AMD are the companies that intrigue me, and I'd also like to add 1 or 2 more companies to my healthcare list, possibly Pfizer or Johnson & Johnson. Those are the 2 stocks that I'm also keeping an eye on. Now, I know many of the companies that are listed on this list of 100 stocks, but there are a couple of them that I'm personally not as familiar with. So I would definitely want to do my research, and I do encourage you to do the same. Make sure that before you purchase any company, whether it's the prices are low or high, do your due diligence, do some research, and make sure that you're comfortable buying that company and buying the stock for them. And remember, at the end of the day, while we are putting money to buy the stocks, the rationale is that you have to have confidence in that company in the first place, because you're buying a share of that company. You're trusting them that these are the companies that, whether it's going to be in the short term or in the long term, they're going to do well. There you have it, folks. I hope you enjoyed this video. If you did, please make sure to like the video and share it with someone who might benefit from it. Let me know in the comment section below which one of these stocks do you currently own or intend to buy. Lastly, please make sure to subscribe to our Momentum channel, where we post videos weekly about finances, investing, and personal development. Hope to see you next time.